Welcome back. Between January and June this year, the Nigerian government's borrowing from the domestic market has hit about 600 billion naira. The figure represents about 33% of the 1.8 trillion naira domestic and external borrowings provided for in the 6.06 trillion naira 2016 budget. Now, this means that the Buhari's administration has a balance of about 300 billion naira only left to hit its domestic borrowing limit of 900 billion naira. The key concern is how sustainable is Nigeria's domestic debt portfolio. Razak Fatai, an analyst with Mary Sturm Securities Nigeria, joins me to speak to this central issue. Good morning to you, Razak. Thank you so much for joining me on the program. And welcome back from the long weekend.
Yeah, good morning. Thanks for having me.
So, looking at the conversation now, Nigeria's debt is currently at about 65.4 billion naira, out of which the states are owing about $10 billion, I beg your pardon. Is this a sustainable debt profile?
Well, if you ask me if it's a sustainable debt profile, I would like to actually answer this question with respect to two perspectives. When you're talking about the sustainability of debt, we have to look at it from the long-term perspective and the short-term perspective. As at 2015, the end of 2015, the debt to GDP ratio stood at about 11.5% for Nigeria, which implies that it's far below what the optimal rate for developing economies should which is around about 40%. And basically, if you look at it from the long-term perspective, it implies that Nigeria can possibly borrow more, and considering the fact that that is considerably low. But, however, if you want to look at it from the short-term perspective, we would have to look at the interest payment ratio to our revenue ratio. So basically, if you look at this, we saw that at the end of 2015, that stood around 32%. That is, for every 100 naira that we generate, 32 is actually used to service our debt, so which is considerably high. And this moved up from about 27% in 2014, and we possibly go higher to say about 40 or even higher than 40%, because if you look at the macroeconomic climate that we have now, we've seen that revenue has been declining following the shocks we've seen in the oil and gas sector. We've seen the production of crude oil drop from about 2.2 million barrels per day to about 1.4 as at August, having witnessed some times around June whereby it went up, and surprisingly we saw it decline again in August, which raises more concern as to whether we'll be able to generate substantial revenue to actually finance our debt. So if you look at it from the short-term perspective, it actually it raises concern for fiscal sustainability. But however, we think if we put everything on a balance of factors, whereby we still have the room to implement some forms of structural policies to actually address the issues in relation to revenue, then again we might still be able to borrow, which again we might be able to borrow to address some key issues in the economy.
But then you see, right about now we have about 70% of of this debt stock being domestic debt. What is the implication of this, in line with the fact that we don't have revenue coming in as quickly and as regularly?
Well, in relation to that, one of the key issues with respect to debt mix has been that up until the end of 2015, the debt mix of Nigeria was 84% domestic, and why the remaining 16% is coming from the external sector, and which basically predisposes the economy to two major types of risk. The domestic debt predisposes us more to the interest rate environment, as about 30% of the domestic debt is actually financed on a yearly basis. That is actually more of a short-term loans. So, which predisposes the economy to high interest rate volatility. And as you can see now, we have a very high interest rate environment. we see the yield in treasury bill space. Average treasury bill yield hovers around 18.3%, while for the bond market hovers around 16.3% as we speak. And this it really gives concern as to whether the government will be able to sustain that level, given the fact that we're also experiencing a decline in revenue. So that's one thing that the government is probably trying to look at the debt mix to optimize that mix. And based on their targets, we saw that they're actually looking at having a mix of about 60 to 40%, that is 60% domestic and 40% which I think it's something considerable to manage some of those risks.
But then do you agree that to manage those risks that we should take advantage of concessionary loans, for instance, especially for multilateral institutions like the World Bank? Yes, because basically, like I said, looking at the existing structure that we have, would note that the yield environment, as we speak, hovers around, like I said, for the treasury bills, hovers around 18.3%, which is considerably high. And again, it threatens fiscal sustainability over the medium term. And which is why it is also important at this very point in time to assess instruments that can offer low borrowing costs, which is what these concessionary loans will actually do. And I think it's a good thing if we can explore such kind of opportunities, because getting a concession of about 1.2% as the plan, which though there might still be some issues as to whether they actually get to implement this successfully. But then, if this comes to pass, we think it's a good thing for the economy. At least they can be able to use to kickstart the economy that has been experiencing considerable contraction, and which is something that is very, very good at this very point in time. You know, you talked about interest rates, you talked about the yield environment, and there's actually a pressing need for the federal government to borrow. And we know that that's going to come in form of Euro bonds, which should be issued anytime soon. So you have the $1 billion Euro bond, and you also have the $5 billion Euro bond. And a lot of people are saying that, look, borrowing is not a problem. And as you've rightly said, that we still have a good threshold for borrowing, even though on a long-term basis. But is that what we should be, even if we borrow right now, for you, prioritize which sectors should get the most if the federal government goes ahead and borrows?
Well, just like you said, we should borrow now. Like I said, one of the key issues that we need to look at in the economy has been what is driving some of the issues that we have currently. We need to look at some key sectors that have strong interlinkages with the economy, and one of which we have the agricultural sector, we have the mining, and also have the power sector, and also we might talk about the infrastructure generally. We believe these sectors are sectors that has the potential to actually drive other sectors, basically because now if you look at what we've been seeing in the economy for some time now, we'll see that the macroeconomic indicators that we have, it's actually not inspiring. We have unemployment at about 13.3%, and then Q2 figures I was really showed that the economy contracted by about 2.06%. And again, more worrisome is the fact that youth unemployment rate stood at about 24%. And if you put the youth unemployment with actually the underemployed, it's well over 50%, which raises concern. And it's further shows that what is very important now is to address key structural issues to actually put the economy on the path of growth, because basically to achieve an inclusive growth, it's very essential to address such sectors such that you can reduce your exposure to external economy, whereby you reduce importation of intermediate goods, which we gladly do. And we can see the effect on the industrial sector, having posted a very high decline in the Q2 results. So basically, those are the sectors I would think the government needs to actually prioritize to actually bolster growth over the medium term.
Razak, are you worried about the rate and frequency of issuance of bonds by the federal government and state governments?
Well, if you ask me if I'm worried, well, it's not really an issue, given the fact that when you look at the rates, basically, for the government, they are also trying as much as possible to play the game of whereby they can get good rates which they borrow to borrow. But basically, if you look at the way things has been going, which has not basically been favoring the government, I would say that it has been an issue of trying to get loans at a cheaper rate. But then that is not even the issue. But I think the core issue now is for us to have a policy direction whereby the investors can possibly trust the government, which is the key issue, not even about the rate at which they issue the debt instrument.
No, but you remember that actually some states have, gone ahead to issue bonds. The Lagos State government talked about issuing a bond, of course, over a 3 to 5 year period. But some other states have, are heavily indebted, having issued some of these bonds. Do you foresee any risk of defaulting on these bonds?
Well, if you ask me whether the states will actually default, well, we haven't seen any cases whereby they default. That's one thing. Then another thing we need to look at it's that most of these ways they are speculative in nature, in the sense that given the high risk, in the sense that for many of the states as we speak, their revenue, it's actually not even covering their recurrent expenditure. But the truth is, we'll not be in this state forever. However, we might be experiencing very tough time now, but then, which is one thing that will possibly affect, or we've been seeing affecting the ability to actually raise debt instruments.
So do you expect to see more states, listing, issuing bonds, I beg your pardon, issuing bonds in the coming future? 2016 is almost over. Most of the states are coming up also with their expenditure framework for the next 3 years to 5 years, long-term plans. Do you expect to see more states entering this space?
Well, based on that, we would expect to actually see more over time, but the rate at which we might be seeing them might not be that significant. But then, just like there are various options whereby you can actually instill growth and development in any state. But given the fact that the key focus now is to address infrastructural issues, to address issues relating to increasing IGR and trying to make the states to be quite independent of the federal. As you can see, that the dependency on the federal government has actually exposed them to a lot of shocks in recent times, which is one thing I would think many of the states will also be looking inward to actually find a ways to come up with initiatives and plans to put them on a path of growth and a sustainable one, so to speak.
So, Razak, for you, if you were supposed to give an advice now, for instance, starting from the state level, what would you say? What should they be doing? Should they look at the option of raising bonds, or they should just make do with whatever it is that they can generate internally?
Well, I would say, there are, for each of the states, the recurrent expenditure that many of the states actually have now, it's very huge. For some, the recurrent expenditure currently outweighs the revenue. And obviously, you cannot just dispose of your workers. And again, you need to also come up with some plans, because the people are waiting. They did not vote, they would not possibly vote a state government into just come in and pay salaries. At least they want to see some development. They want to see the states growing. So basically, it's very important for them to actually also borrow. But although it is much more important, like I would say, it is much more important to actually generate more money from the system, because again, if you look at, for many of the states, their revenue generation capacity has been quite low, except for states like Lagos. So basically, we think many of the states should look inward to optimize their tax collection and the tax base. That's
not what everybody wants to hear right now. Nobody wants to talk about paying more taxes.
No, I'm not saying pay more, like the tax base. You have so many people not paying tax.
But then you also have an issue of multiple taxations.
Yeah, that's an issue, and you cannot always have it perfect. There always be times whereby you have people who in a way might be faced. But again, which suggests that we need to actually improve on our efficiency, and then again, the system, like I said, it's more of structural policy issues that we've been having in Nigeria, which is one thing that really needs to be addressed at all levels, both state and federal levels. So basically, it's really a good thing.
So it's a good thing, and then you're quite confident and you're satisfied with the level at which the bonds market is at the moment?
Well, if you ask me if I'm satisfied, I won't really say, hey, maybe I'm satisfied or something. But basically, what I just think is the rate at which we are now, it's not something that is actually sustainable. We've seen that the heightened risk in the economy is what's actually driving, and the fact that there's been a lot of instability in the FX market, which again has been an headwind to the other sector, which is why the government is, and even the CBN is trying to ensure some level of stability. But basically, we think over time, over the medium term, we'd see everything should normalize. And
okay.
Yeah, so.
All right. Thank you so much, Razak, for coming on the program.
All right. Thanks for having me.
Business Morning continues in just a moment. Stay with us.